What's up, everybody? It's the Stable Lad coming at you again with another weekly Friday update. Just before the weekend, we're going to get into today, of course, some of the news that we've seen this week in stablecoins, as well as just a sort of bigger macro picture, and then some of the really nice-looking APYs that I'm just sort of seeing out there in general, and some of the things I'm thinking about for my own portfolio. So without further ado, let's get into it for the week. So lots of news this week, actually lots of news every week. I can hardly keep up with the news going on right here, but we'll just go through one by one here. Maple has reached $5 billion in assets under management. I mean, that's really impressive for something that's super new. Syrup USDC and Syrup USDT is a pretty new product of Maple, and it's a yield-bearing stablecoin, and it's grown just really, really fast. For people that don't know, Maple is essentially a kind of an institutional grade lending platform that lends to large institutions and has been around for many years. But this is a cool new product, and I'm actually thinking about playing around with some of that in my own portfolio, looping those rewards. Another thing that I noticed this week that's really, really cool, according to Jen here at the Backseat VC, AI companies have seen a 10% revenue increase after turning on Stripe stablecoin payments. This is super new. This is out this year. And this is just the beginning of just sort of what we're seeing in the news cycle here. I don't think that this has actually happened. Watcher Guru said that they MasterCard to acquire crypto startup Zero Hash. I think they're still in negotiations, so this hasn't actually happened yet, but another really big acquisition in the making here, potentially happening for MasterCard. It just, again, shows the interest from high-level publicly traded companies that just sort of see the writing on the wall. Now that the Genius Act has passed and there's regulatory clarity for stablecoins, there's really no choice but having to kind of go in and play the game. Tether's treasury holdings surpass sovereign states. I mean, this has already been the case, but they've moved over here past South Korea. I think it used to be when you added Tether and USDC together, they passed South Korea, but now Tether is doing it alone. So this is just Tether alone passing South Korea, putting them into the top 20 in terms of treasury holders. This is just scratching the surface, and I really think they're going to zoom up here really, really quickly in quick order and surprise everybody within the next year or two with their growth. Let's take a look here. This is huge. Western Union. I'm doing a kind of a article series on Substack that talks about where I think stablecoins are going and how they're going to change the world. I just did an article drop this week on how they're changing payments, digital payments, with players like Stripe and Shopify and things like that. And then next week, I'll be talking about payouts and remittances. And obviously, this is really timely because Western Union is the world's largest money transfer business. So anybody that wants to send money anywhere in the world, if you've got family in Europe or South America or wherever, you're likely using Western Union or something similar to it. And here they are. They're building exclusively on Solana. So they're building their own stablecoin, I believe, on the Solana blockchain. It makes total sense to build on Solana. It's a cheap chain. It's fast. Here, USDPT, excuse me. It's hard to say. They're building their own stablecoin to send those transfers. So this is, again, like just another huge player that's joining the space, because it's not just that the technology is better. It's that Western Union can actually make more money, right? When you can send money globally for a fraction of what Western Union currently does, if they can charge the same or even just lower their prices a little bit, which customers would be happy with, they're still making a larger margin. So this is a huge win for stablecoins, a huge win for Western Union, and again, just shows you sort of where I think we're headed just overall.
Let's take a quick pause. If you'd like a simple reference guide that shows you how I think about building a stablecoin portfolio, from risk tiers to position sizing, and even how insurance fits in, I put together a free guide you can download. It's the same framework that I use myself, designed to keep things steady and easy to follow at a glance. The link's right below this video. Grab the guide, and while you're there, make sure you're subscribed so you don't miss the weekly updates I share on how I'm adjusting my own portfolio. All right, let's get back to it.
Another massive thing here, right? Visa is adding support for 4 stablecoins on 4 unique blockchains as their spend quadrupled in the last quarter. And we're talking about like stablecoin spend on the network. So we're seeing adoption. It's small. This is like, it sounds like it's really huge. It's not. It's still really small, but we can see that it's growing, right? It's growing fast. In the fourth quarter, stablecoin linked Visa card spend quadrupled when compared to a year ago. So again, this is not like huge deal, but again, it just shows you that adoption is happening slowly on Visa and they're expanding their reach. Citibank partners with Coinbase to approve stablecoin utility and digital asset adoption for its clients. We're seeing this basically with every bank. We saw it with Clearbank last week. We're seeing it with Citibank now. I think we're just going to keep seeing more and more banks come in and add support for it, whether it's on and off ramps or other types of support. Here's just another one, JP Morgan to launch investment fund tokenization platform. So we're just seeing the big banks slowly start to add these things. Whether or not like that's really good or bad for stablecoins or decentralization, as like here you got somebody pointing out, right? This is not what decentralization was built for. It's not what stablecoins were actually built to do, but it doesn't really matter. This is about adoption. This is what happens when big banks come in. It may not work exactly the way you want it to, but it's being adopted on all sides. And for me, as a stablecoin investor, it just means that I feel far more comfortable holding stablecoins now than I ever have in my life, and I feel far more comfortable investing with it because I see that it's becoming a part of the underlying systems that surround us day to day. Eventually, I could see JP Morgan offering DeFi on the back end. They're not going to call it DeFi, but you could see them saying, "Oh, we'll offer you 5% in your wallet," and they'll be using DeFi in the back end, and we won't need to do all the fancy heavy lifting that we're doing currently. But right now, it just spells opportunity for me. Another one, IBM announces a new platform for financial institutions and regulated enterprises entering the digital asset economy. Again, just another big company, a publicly traded, massive tech company that's adding a platform for fintech and for stablecoin. Let's take a look at what's happening just sort of internationally, because I focus a lot of attention on the U.S. because that's where I am, and I think that's where stablecoin growth has been tremendous. But it's always good for people in the U.S. who have their head buried in the sand sometimes of just being stuck in the United States to kind of just take a step back and see how big this can be globally. And so Flutterwave, which is one of Africa's largest payment providers, is using Polygon, which is a Ethereum layer 2 for cross-border payments. Again, like stablecoins, one of the big unlocks they do is they make payments globally easier. Again, in the article I wrote, I touched upon how cross-border payments are so challenging. There's hundreds of different payment alternative payment types you can use. There's red tape within all these countries, and then when you take a look at a place like Africa that's got all these different countries within it, there's different rules in every single country and every single region. The same thing in Europe, the same thing basically all over the world. And so stablecoins unlock an easier way to do this, and it starts to make it like stablecoins become kind of like email, right? Where you could send money, you could send information through an email anywhere in the world, almost free and basically instantly. Stablecoins unlocks that for value, and it removes all the lifting. It doesn't matter which app you use, which email provider you use. Like you could use Hotmail, Gmail, Proton Mail, like AOL. It doesn't really matter what you use. You can send information via email anywhere in the world using email protocol. The same exact thing for stablecoins, and that's what this thing unlocks, and that's why it's so massive. KRWQ launches as first Korean won stablecoin on Base, on the Base blockchain, which is a layer 2 blockchain on Base. This is IQ and Frax here. But again, just shows you that these things are being adopted globally. Right now, Korea is still, I believe, working on stablecoin regulation, but it just shows, again, the growth internationally. We talked about this last week, but Canada is trying to play catch up right here. They know they're losing. They know they're losing fast, and they need to catch up quickly. Otherwise, they're going to be way behind Europe, which is surprisingly ahead of Canada in stablecoin growth. They're well behind the United States, and they know they're going to lose out, and they know it's going to harm their currency, as we saw right here with Tether holding U.S. Treasuries. Canada, all these countries, they want stablecoins to hold their treasuries as well and issue Canadian dollar stablecoins, and they know they're missing out on it, and so they're really quickly trying to build as fast as possible to catch up. Let's move on to macro. The Fed, as expected, lowered rates by 25 basis points. This time there was, I think, one of the Fed members was voted against it, hoping to increase it by 50 basis points or more. But this was a 10-2 vote, and it was pretty much baked in. The one thing that the Fed and Jerome Powell sort of did do was he's pretty hawkish on whether or not there will be any more cuts before the end of the year. He basically said it's not a given, and was leaning towards the fact that it might not be. We still have somewhat sticky inflation, which he talked about is sort of led by tariffs and that kind of stuff. But the job market is slightly weakened as well, which is generally can be a trigger for lowering rates even more. So for our purposes, like, what does this really all mean? And it just means the end of tightening, right? So I think this article here on Delphi Digital does a really good job of kind of talking about what it is, a liquidity turning point in the making. So for our purposes here, we're not an investment channel. We're not a trading channel in terms of overall stocks and crypto tokens, right? This is a channel that talks about taking stable coins, a non-volatile asset, and investing that. But we do like to look at macro, just sort of see where we are in the big picture of things, so we can step back and zoom out. And what we see is the end of quantitative tightening. This is a really huge deal because, as we can see, if we kind of look down here on one of these charts here, we can see that Bitcoin dominance is almost inversely correlated to the Fed's monetary policy. And so what that means, right, is that as the Fed generally eases monetary policy from their end, we see an increase of value of cash flood to risk assets, Bitcoin being one of them. And then, of course, that floods down into Ethereum and all the altcoins, as well as the NASDAQ and tech assets and all those kinds of things, right? So we have money that sort of leaves the safer things and then comes over to riskier things. What that means from our perspective, and what I've been sort of talking about on this channel and on my Substack, is that I still think we're in a macro bull trend. And that's important because it means that we can still be a little bit more aggressive with some of the higher risk stable coins that I'm holding. So I'm still holding USD AI and some of these higher risk stable coins, which I would not be comfortable holding if I thought we were heading into a bear market. If I thought we were heading to a bear market, I would go far more to quality. I would remove risk to higher risk stable coins or sort of newer stable coins that are out there, and I would put most of it in USDC and USDT, maybe USDS or DAI and things like that. And I would just flock to quality. The same thing goes for the protocols that I invest in. Right now, I'm happy taking some risk with some newer protocols that don't have as much history and experience, because I feel like we're in that macro bull trend. When I start to see that shifting, I'll move more into all the low risk and mid risk parts of my portfolio, and I'll move things out of the high risk things, because I just don't know how well those high risk protocols and those high risk stablecoins are going to withstand a bear market, a prolonged bear market. So all that being said, again, I just think if we take a look at this chart, I think this is where we're headed. I think we're still on track for that macro bull trend, which means I'm not adjusting much of my portfolio. I'm staying spread out in my risk profile exactly as I had kind of planned, and I'm comfortable holding things that are a little bit higher risk as a blend in my portfolio, which I might change if the portfolio shifted. So now let's go look at what we can see here on some pretty sweet little APYs that we can see here. So I'm on DeFi Llama, which is one of my tools that I use just to kind of take a glance at the space. And we can see like there's like crazy things like 11,000% here, almost 10,000% here, all these things. I don't talk about these kinds of things because the TVL, the total value in these things, are too small for me. These things dry up fast. You can't get your liquidity out of them sometimes. The APYs dry up fast, so I don't bother with that. So if anybody notices that I focus on things that are maybe a little bit more boring, it's because I'm looking at TVL. TVL matters to me. I take a look at this total value locked category, and if I see things in this that have really nice APY, like look at this. This is Stream Finance, $416 million, paying 14.38%. At least that's what it says here. It could be wrong on the actual website, but this is the kind of stuff that I would be interested in. That's how I sort of look at this overall and how I kind of try to find my APY. So let's take a look at a couple of things that I thought looked really interesting and things that I'm actually also considering for my own portfolio. So this is on the Avalanche blockchain. This is a USDC pool, 15 million in here, paying 35.87% with some, like we've got 3.8%, which is the base, and then 32% in terms of rewards. This is 35%, like wow, right, for USDC pool. So I do already have money in some of these pools on Avalanche, and some of them have completely dried up in terms of APY. Now that can fluctuate, and so sometimes I just like to sit and watch for a week or two to see if that doesn't fluctuate back. But I've been considering consolidating on Avalanche for a while now, and this is one that I mean, look at that. It looks really, really good. We can take a look. We can just take a look at what else they've got. Go by supply here on Avalanche, and we can see we've got some other stuff that looks really interesting as well. And again, I look at supply. These don't look so good to me. I also look at utilization. If it's a 99% in it, you got to be really careful because once it's full, you can't. Your money's not liquid. You might not be able to take it out unless people start repaying their loans, which is why the APYs are so high. It will drastically go down as people go, whoa, I don't want to pay 100% for my borrowed APY, and they'll get out of it. But we can see here some of these other ones. This Keyring USDC, what we just looked at, 35.77%, and it's only 75% in usage. So we got some good stuff on Euler on Avalanche. Another thing, this is Gearbox here, and I have some money here in one of these pools on Plasma, on the Plasma blockchain. But look at this one. Invariant Group here has got 30 million in this pool and 42.25%. Again, look at the borrowed. It's basically a cap, so I expect to see that drop down as people start to get out of their loans or move that around, but pretty darn nice. This was on the Hemi network, paying 38.76%. Again, pretty full in terms of what's borrowed, but just something that caught my eye. Etherlink, this one's much nicer, 15.94 million at 17.51%. And still got plenty of cap in. So if you're on the Etherlink network, which I've seen a lot of growth on lately, that looks pretty good. A couple of these things here just mentioned on Plasma, they're not bad. They're a little under 10%, but looking pretty darn nice here on Gearbox. Shout out to what's going on StakeDAO on Ethereum here. Right? These are a bunch of curve pools usually. Not usually, but these are a bunch of curve pools on here that have really good TVL and really good percentages of APR being paid. This is Frax USD and Curve USD coins paying 26.87% here on StakeDAO. Here's another one, USDT and Curve USD paying 19.2%. Another stablecoin pool paying 15.37%. These are on Ethereum, so if you're on Ethereum, these are just no-brainers to me. I'm not on Ethereum right now because the transaction costs are a little bit too high during the bull market, but wow, those are pretty nice looking. Another thing I've been sort of mentioning on on Fluid, and just in general, was during that liquidity crunch where 20 billion was wiped out a few weeks ago in crypto, we saw APYs just sort of take a nosedive just across stablecoin pools all over the place. And these Go pools on Fluid and other places really dried up quickly. They were paying really nice APY, and then they dried up quickly. And I kind of said that they would probably come back again, and they are. So this is on base. This Go pool is paying 19.64%. This is a low risk play for me. I'd be happy putting 10% of my portfolio in a position like this. And I don't think it's going to stay this high, but right now, getting a low risk position at almost 20% on base, that looks really, really, really enticing to me, and I will probably be moving some money back there in my own portfolio. And so that's what I'm seeing this week. There's another thing I just sort of noticed. Actually, let's pop that up real quick. Let's take a look at Auto. So Auto just launched on Linea, and they're paying 16.69% here. It's a pretty small pool. It's got $500,000 in this pool. So it's not like something like Base. It's got 33 million, or ARB, which has got 10.91 million. It's just, they just launched it, I think, yesterday, the day before. And so it's this pool is growing, and I expect the APY to come down too as it grows. But I am seeing some nice things over on Linea. And so I have been considering, I have a small amount of money sitting over on Polygon that I've been watching for months. And I keep talking about how I'm probably going to move it at some point, because it's just Polygon hasn't been doing well for me in terms of overall APY. So I may start playing over with Linea. There are costs when you bridge it over, which I hate paying, but if I can play over on Linea and get some percentages that are 15, 16, 17, 18, 19, 20%, as opposed to the under 7, 8%, which is what I'm getting around on Polygon, it might be worth moving that or a portion of the portfolio over to Linea. So if I decide to do that, I will talk about it on this channel. I'll bring up more about Linea next week if I do decide to do that. But just something worth pointing out, something that I've noticed is some APYs jumping up and some activity happening on the Linea blockchain. That's it for this week. Have a great weekend. We'll be back next week with hopefully another massive news cycle. I don't expect this to slow down anytime soon. This does remind me of previous bubbles. And I'll just sort of say, like, when crypto sort of spikes, money floods into it, everybody starts building on things, banks start adopting crypto stuff, and that could all disappear if the bubble bursts. But unlike bubbles, this is not a speculative bubble that's associated with crypto token prices. In fact, if you look at crypto and you look at tech, like, things are just, especially in crypto, things are kind of down. Things aren't that hot right now. And so I don't think the fact that we're seeing all this sort of news cycle, I don't think this has anything to do with any sort of bubble. I think it has to do with a bigger picture that companies like Western Union, companies like Visa, when they lower their costs by using blockchains, they actually can increase their margins without having to do anything. And so I think they see it as a real business opportunity. This may turn into bubble type territory, and if that happens, we'll sort of rethink and readjust what we're doing then, but I just don't think we're anywhere near there at this point. So we'll cover more of this as the weeks go. We'll keep covering macro every single week. And if you want to follow along my full portfolio, where I break down all the moves I actually make, all the changes and investments, protocol deep dives, my full portfolio view, where you see every single holding that I have, the percentage that I have it in my portfolio, and the percentage that I'm earning in my overall portfolio and weighted percentage. Just follow me on Substack. The links are in the description and the show notes here. And until next week, I'm the Stable Lad, and have a great weekend. I'm the Stable Lad, and if you like today's video, please hit that subscribe button. Every week I break down what's happening in the world of stablecoins and why it matters, clearly, calmly, and without the hype. This channel is for educational purposes. It is not meant to be financial advice. So always do your own research and manage your risk wisely.